What's going on, guys? Quick back test here on the Evo 15 model here. Now, looking at that London session, right? So had a question about the London session. I was pretty confident that it started up about midnight my time. Noticing a couple of things that we could maybe use to our advantage here. That first hour kind of leading into London or right after London opens, we're getting some pretty good moves. And depending on if we are managing the measured potential into next supply or next demand as sort of the indicator whether it's got enough potential for us. Remember, we need at least 50 points, 50, 60, 70 points worth of upside or downside to say that, it's worth our time. But if we look at Wednesday, right, I'm just going back a couple of days here. That way I don't make this video too long. But if we look at last Wednesday, okay, where is it at? I'm going to put it on a drawing tool right about in this range. Is the London Open. Okay, now going into the London Open here, going into that midnight hour for me here in California, it's right here actually. So this doji, I'm going to mark it just so we can see. This doji is the midnight this doji is the midnight for me here in California. Now if we look at what was going on prior to that, we were already in an active 20 play. Okay, so we were already over 20 SMA supply. The bias is bullish, and what we are doing is looking at where we came from, which we come from this demand zone here, 18,627. All we're realistically looking to do is, can we take out a prior swing high, right? So what is the prior swing high going to be? Prior swing high is going to be here, right? Prior swing high is going to be here. If we can continue the price action run in London, great. We can use an easy, simple stop loss, any closure below the 20 SMA. And all you're going to do is sit and ride in it. We're looking for 50, 60, 70, 100 points even. You got a lot of measured potential into your next demand and winning trade there, right? Again, we don't really need to get too much into, how many points exactly am I risking? Remember, we want to throw on 1 or 2 micros on these trades. We're looking to catch the bigger moves. So, if you give up 50, 60 points, give up $100, give up $200, but we're potentially looking to make $200 to $300 on these trades. That's Wednesday's price action. Let's zoom over here into Thursday. If we look at Thursday, where's that midnight hour candle? Right here. Okay, so right here. So let me mark it out. Here's that midnight hour candle. We were in an active 20 SMA play to the short side about 30 minutes prior. Now, this looks like it doesn't have a lot of space, but one thing we need to do, let's mark out the levels. So if we're getting in, right, if we're getting in on this play here after midnight, your demand zone is sitting at 18,627. The active 20 play was from 733. Okay, so from 733 to 627, you're talking about over 80 points, right? So here's the midnight hour candle. If you play this rejection, right, you can actually get a tight little entry here when you back tested the 20 SMA, and you could have used that reason why candle as a stop. So any closure above the candle that closed below your 20 SMA bias, you could use that as a stop. When we back test and we hold, you could jump short here, targeting your demand zone for over, what did we say? 627 to 33s, right? So let's call it 30. Yeah, you've got about 80 points worth of room here. So not the best, but in a situation like this, I might target 30 to 50 points. I might target 40 to 50 points, right? Just let it see if it wants to test that. If it doesn't want to test that, fine. Also, this is a good scenario where, let's say, for example, we don't catch something like this at London, and then we start looking to, the New York pre-market, this going into the New York Open. We could have, this was the day where I was short biased, remember, right here after the 15-minute opening range. But on a day like this, we could realistically zoom out and tell ourselves, okay, coming into New York, are we trading over or under the 20 SMA? What's our bias? Bias was bull. Where did we come from? Where did this move come from? This move came off of a demand zone hold at 18,627. It came off of the demand zone hold. We flushed, we held, we pushed. Bias is now flipped to bull. And all we're realistically doing is, you could buy the pullback, You could buy a confirmation of swing high. You can buy the opening range breakout, which is the opening drive trade. You can buy all of these prices long. Bias is bull. We're over demand. We've got well more than enough points here into 19,000. This is over 350 points of potential upside into our next supply zone. Okay, makes sense? Let's go on to going into Friday's price action. So if we look at the midnight hour, here's the midnight hour literally smack dab to the 15 minutes. We get a bear bias. We close below the 20 SMA. We lose 19,414. Remember that level, guys? Remember 414 from Friday? What were we waiting for on Friday? 215 to the downside, 414 confirmation to the upside. Look at how this played significance in the London session. We lost 414. Bias is bear, okay? We did backpedal. Now, again, getting in on the confirmation, 382. I want to give you guys a full perspective here, how much you would have been down in this position. 382 all the way up to 410. You were down 35, 40 points, let's call it. One micro contract, $80. No big deal. What are we targeting? Well, obviously we're targeting our measured potential, but we understand it doesn't have to touch measured potential. What are we looking for? 50, 75, 100 points. If you have those three brackets set up, even if you have just a 50-point bracket, hit with ease. If you have a 75-point bracket from 383 down to 300, hit with ease. If you were looking for 100-point, hit with ease, okay? So maybe if you are looking at those London sessions, look at the prior hour leading into London. Look at the hour of London. See if we're confirming an active trend. What I'm noticing about London, price action is obviously a lot slower than New York, and things tend to trend in one direction and then flip going into New York. Or, right, if you look at this scenario here, things tend to trend in New York and then flip going into New York. If you look at the prior day, that Wednesday, things tend to trend in London. Things tend to trend in London and flip during New York, right? Let's look at this day, back to Tuesday. Here's that London midnight session. We were already well over, right? We were well over the 20. We were well over our bull bias. Now this trade actually started an hour before midnight, okay? So an hour before midnight Pacific Standard Time, it gave you a trigger to fire long, and it touched your supply perfectly. What could we really say about this London session leading into New York? It did nothing. It had a quick juice. It kind of just went sideways, okay? Kind of just went sideways. And then through New York, look at this play here off of New York. We confirmed 18,178. We were bull bias. Let it break your key level. Let it confirm. Take it for a ride. Beautiful, beautiful here, guys. We're going to catch some amazing trades this week. We need to be patient. We need to allow the trades to work. And we don't need to overthink it, right? We don't need to overthink it. Let's play this 1 or 2 micros. Let's look for those bigger move trades. Let's lock in a good trade. Let's call it a day.